All right, what's up, everybody? Hey, if you've got me loud and clear on here, shoot me a thumbs up in our agency chat. This live feed's playing some tricks on me this morning as it would not let me in here. So once I know that you guys got me loud and clear, I'm going to keep talking. But until then, I'm not going to just sit on here and talk to myself. But I think we're good. So, okay, cool. I appreciate you guys. Hey, jumping into today's call, we're going to talk about the different kinds of insurance. There's so much opportunity for you out there as an agent. And a lot of times we miss that opportunity because we don't understand what kind of coverage the person that we're sitting with or that we're talking to on the phone actually needs to have. So we're going to jump into term insurance. The title of it, right, is term insurance bad? And then we're going to jump in to term versus whole life, term versus index universal life, and how do those plans work? So we're going to jump into that, but I want to give you guys a shout out. Just what an awesome month of February that we had as an agency. So many of you guys hit some big numbers, and I can't wait to go over those numbers with you guys on Friday's call. So if you've been hanging out waiting to see where your production landed for the month of February, we're going to jump into that on Friday's call. But you guys are going to be surprised on who the top 10 agents are so far this year. But a lot of you are on track to hit the Scotland trip early, which I'm excited to see. So stay tuned for the numbers. We also got a cool announcement for you guys as we jump into the call. But let's first tackle the verse of the day. Okay, this is one of just a really impactful verse, right? This was about a story, right, inside the Bible where somebody cried out to God and said that you would bless me and enlarge my territory, that your hand would be with me and keep me from harm so that I will be free from pain. And God granted his request. I love that verse because it shows what's actually possible if you ask for help, right? So many times we are trying to tackle this life just on our own power, on our own control. And eventually you're going to hit a situation in life where it's completely out of your control, and he's the only one that can help you. And it just goes back to show you that if you ask for that, then you will receive it. So love that verse of the day as we kick off Wednesday, March 12th. Let's talk about a cool announcement for you guys. So we really want to make a difference this year as an agency. That's our goal, right? How do we help each other? How do we help our clients? But how do we make a difference in the community? And Alicia and I were talking about what would be a really cool way of giving back to the community. And that is going to be a new incentive for you as a top agent. So the agent of the month is going to get to pick a charity, a group, right? A charity, a nonprofit, something that is making a difference, something that is running to advance, right, the kingdom of God, to help people. Like we just did the Wells of Life, donating the well in Uganda. We're going to do something each month, but the top agent is going to get to pick their charity of choice, right, or their mission of choice that they would like us as a company to donate money to for that month. So if you hit to become the top agent of the month off of net production, you will get to pick the charity that money is going to get to go to. So that gives you guys a cool incentive to run. If there's a cause out there that you're very passionate about, all right, then you will be able to get to participate, right, and having us work with you to donate to that charity of your choice. So curious to see those of you that are doing things right now, making a difference. Put it in the WhatsApp chat. What are some of your favorite organizations, some of your favorite groups that you would like to see some money get donated to? And if you run to be the top agent, you're going to get to pick for that month where that donation is going to get to go to. So excited to launch that. But let's jump into today's call. All right. Is term insurance bad? All right. Depending where you came from, depending, what your background is, who your target market is, depending on if you're a telesales agent or an in-person agent, if you're helping younger people or older people. Okay. This word term insurance is either going to make your eyes light up because it's a good thing, or it's going to make your eyes cringe because it's a bad thing. So I'm going to jump into, is term insurance bad? All right. First, as we do this, let's talk about what term insurance actually is. Because believe it or not, term insurance could be very good for somebody that just hit 70 years old. Maybe it could be very good for somebody that just hit 30 years old, but it depends on what their goal is for the insurance. That's the most important part. I see all these videos going around online about how term is the best thing and whole life is horrible. And then on the opposite side of that, it's whole life is the best thing and term is horrible. And it's just not true. It depends on your client's situation. Okay, so who is term insurance for? Number one, term insurance is generally going to be for people that are healthier, people that have not a lot of medications, they don't have a lot of health conditions. All right, that's going to be number one. So if you're talking to somebody and you know that they have a lot of health conditions going on, the likelihood of them getting approved for a term insurance plan is not very likely. So that's number one. When you guys are talking to your potential clients about the different kinds of insurance, right? You really want to have that understanding. All right. You don't want to promise somebody a big term policy that's taken 50 prescriptions and they just had surgery last week. They're probably not going to get approved for it, right? So number one, term insurance is going to be for your healthier crowd. All right. Generally speaking, term insurance is going to be for your younger crowd, right? 65 and younger on average. Term insurance goes in terms, right? 10 years, 20 years, and 30 years for the most part. And that is going to dictate, right, based off of your client's age. But who is term insurance for? Term insurance is for somebody that wants the highest death benefit and the lowest monthly premium, but they understand that eventually that plan is going to terminate or change on them, right? Let's say they have a 30-year term policy. The premiums will stay the same for 30 years. Then it's going to get shut off, right? It's either going to end completely or the premiums are going to substantially start increasing. And eventually those plans get to the point where people just usually cannot afford the increases. Okay. So term insurance is for somebody who wants a large benefit for a specific amount of time. Think about your clients that have a mortgage on their house. Perfect product. If something happened to the breadwinner of that house, the mortgage could get paid for, right? Maybe they have a 30-year mortgage. They just bought it this year. It's a $500,000 house. They get a $500,000 term insurance plan to cover that in case anything happens to them in that time frame. There's a lump sum of money coming to their spouse or their kids or their beneficiary to pay that off. After the 30 years, they don't have the mortgage. They don't have a need, right, to have that high of a death benefit anymore. So it's a good plan. So that's who term insurance is going to be for. As you guys are talking to your clients, a lot of times you're going to find that all right, we lost you there. The feed, the live feed paused on me. So let's see here. Hopefully we're good. I don't know what you guys just saw there. My whole computer just froze on me, but something going on with the live feed today. Anyway, term insurance is going to be for that client that wants to have a large benefit for a long amount of time. Okay. And then eventually it will end or change on them. You guys are going to find that a lot of people you sit with could really use term insurance. Even your older crowd, even people that are in their 50s, 60s, 70s, the people that are getting towards retirement age, guys, a lot of times they still have a mortgage. All right. Especially in today's economy, they still have a mortgage that they need to cover. So term insurance is not necessarily a bad thing. All right. If you run into a client that has a term insurance plan, they're paying very little for it each month. Not necessarily a bad thing, right? So that's number one. Let's talk about, hopefully I get this computer to work for us this morning. Okay, let's talk about some statistics as we jump into the different kinds of insurance. Now, I took this off of a website. It's called thezebra.com. I have no idea how credible it is. It looks pretty credible, right? But if you Google life insurance statistics, it's the first thing that pops up. So it says that 30% of Americans who have life insurance are insured through a group. All right, what does that mean for being insured through a group? It means that they are being insured through their work. And when their work ends, their coverage ends. That's usually term insurance. So 30% of the country has term insurance. 20% of the country believe that they don't have enough coverage through work. A lot of times, guys, if people have coverage through work, it only covers their 1 year salary for the most part. All right. 83%. Check this out. 83%. That means 8 out of 10 people that you talk to would consider purchasing life insurance if it was easier to understand, right? That's a huge opportunity for you as an agent. If you can make it easy to understand, you got an 83% chance that that person is going to work with you and buy more insurance. All right. 51% of the country would rather purchase life insurance through a person and not through the computer. All right. Why is that? Because they want somebody that knows what they're doing. They don't know what they're doing, right? 83% don't understand it. So if they go online to buy it, a lot of times, guys, they don't finish the application because they don't know what they're looking at. 52% of the country thinks that insurance is too expensive. All right. So check that out. Why is that? It's because they've not actually been given tailored quotes to what they want. Maybe somebody wants term insurance and they've been getting quotes for whole life. It's going to look way more expensive than it needs to be, right? Let's talk about the younger crowd. So only 10% of millennials say that they have the life insurance coverage they need. 10%. That means 90% of people in the millennial generation don't have enough insurance or don't even have it, right? 44% of those, if one of their family members, right, their spouse, the person that works, the breadwinner, something happens to them, 44% of them would face a financial hardship because they're not prepared. So I'm sharing all of this with you guys, right? Why? Because it's a huge opportunity for you as an agent to help people, but you can only help them if you understand the different kinds of insurance. So let's dive into it a little bit further. All right, let's talk about whole life insurance versus term. What's the difference, guys? You guys all know this on the call, right? Agents, but if you're watching the call and you're not an agent on Facebook or YouTube, real simple. Whole life just stays the same. You pay the same amount each month. Your death benefit stays the same. And it is what it is, right? Generally speaking, whole life insurance is going to be for people getting on towards retirement age, right? It's a smaller death benefit and kind of a more expensive premium compared to term. Why is that? Because at some point in time, the insurance company is going to be paying that benefit amount to your family. Whereas term insurance, all right, it's a gamble. They may or may not have to pay that. Most people outlive their term insurance plan. So the insurance company gets all those premiums for all those years, and then they just get to keep it, right? It's like you're renting your insurance plan when you have term insurance. It's like if you were renting a house, every month that you make that rent payment, that's going to pay off the landlord's mortgage, right? The landlord's getting to keep that money. You're never going to get that money back. That's like what term insurance is. With whole life, at some point in time, that thing is going to be paying out to your beneficiary. That's why it's more money. That's why it costs more. That's why they don't offer as high of death benefits with whole life, because they know they're going to have to fork out that money at some point in time. All right. Who's good for whole life and who's good for term life? Guys, whole life is simple. It's for your client that wants guaranteed coverage that's not going to change, that they know is going to be there whether they're 50 years old or 115 years old, right? That's who whole life is going to be for. Usually people that want to pay off final expense plans, cremations, burials, burial services, right? They just want a guaranteed chunk of money left behind for their kids, whatever the case is. Whole life is for somebody that they want that to be guaranteed forever. It's also for people that have some health conditions going on. Okay. Whole life insurance is a lot more lenient on health conditions than term insurance because the death benefits are usually smaller. So you can get more people approved with whole life than you can with term insurance when they have a lot of medical things going on. All right. So that's the whole life versus the term debate. All right. Let's talk about another one. Is an IUL bad? Okay. Who knows what an IUL stands for? Drop it in the comments. Guys, an IUL is an index universal life. All right. I don't want to confuse you on this call, but it's a permanent kind of life insurance, right? Is it whole life? No. Can it actually last forever like whole life? Yes. The problem is it has to be sold the right way. Okay. You guys might see a lot of videos on TikTok and Instagram reels and all these different things, right? About how an IUL is tax-free retirement money and it's like this, whatever. Guys, an IUL is good for somebody who wants to have a large death benefit, a lower cost than whole life insurance, and they want the chance for it to last forever, right? An IUL, in my opinion, is only good for somebody who is going to fund it the right way. If you make the minimum payment on an IUL, it's probably not going to last very long for you. Okay. But if you fund it, it will work. So let's talk about funding. How does it work? Okay. An IUL is flexible premium insurance. That means you can make the minimum payment. You could pay more than that. You kind of get to pick, all right, what you want to pay. That's a good and a bad thing. When you get started with an IUL and you're younger, the cost of insurance, this is what the insurance company says it's your risk, right? So right now, let's say I'm 30, what am I, 32? Forget my own age, right? Just turned 32. So if I have $100,000 IUL, maybe my cost of insurance with the insurance company's charging me is $20 a month. Well, my premium set at $50 a month. That means every month I make my payment, $30 goes into a cash value bucket that gets to grow based off of how good the index funds do. All right. And if you fund it right, the goal would be that as that cost of insurance increases each year, maybe next year it costs me $25, right? Well, when I get older, the goal would be that I have enough cash value to cover the cost of insurance so that my premiums don't skyrocket on me. But you guys probably have heard of some nightmares with universal life plans where the premiums skyrocket, take all their cash value and cancel their insurance, right? One of my first clients ever, she was 85 years old. This is back in 2018. 85 years old. She had a universal life plan. She had $25,000 of cash value. It was a $50,000 death benefit. She's paid into this thing for almost 40 years, right? She was 85 years old. And when she was between years 85 and 86 years old, the entire cash value was going to be taken to pay for what the insurance company was charging her for that death benefit. So she was going to lose all $25,000 between that 1 year because of how much that policy increased in cost, right? So an IUL and a UL are good products only if you pay attention to them and you watch them and you fund them the right way. Okay. So an IUL is going to be a great plan if you're with a client who they want permanent coverage, but they don't want to pay the cost of whole life, right? They want to have a higher death benefit. They don't like the idea of term because they know they're losing their, every time they pay it, they're not building cash value. So an IUL is a great fit for a lot of people, usually in their 30s, 40s, 50s, right? Sometimes in their 60s and 70s, but very rarely would I recommend an IUL for somebody in that age group. But sometimes if they're willing to pay enough money to fund it correctly, it could be a good plan. So guys, if you're sitting with somebody younger, don't be afraid to offer this product. Mutual of Omaha has a really good Index Universal Life Express, meaning they don't have to do field under a paramed exam, anything like that. And the way that plan's structured is it's guaranteed for 20 years, basically, is the concept of it. If they make their predetermined plan premium and it's the right structure, you do it the right way, then they have a guarantee that that thing would last for 20 years if they make their monthly payment. It's not a bad product, but it's got to be written for the right person at the right age. And if you're sitting with somebody younger that wants a large death benefit, it's really a good option to look at. It's very simple to write. So the different kinds of insurance, right? It's hard to pack this all into one call, but you've got whole life. I would say that's 90% of the people that you visit in retirement age. That's the route that they need to go. Okay. Term insurance, very good. If there's a large debt that needs to be paid, a large amount of money they want to leave behind for their family, right? Great option for people to have a lower cost plan for a specified amount of time. And it's going to be there, right? Very simple. And then an Index Universal Life, a little bit more complicated to write. You really got to study it up as an agent to make sure you're writing it for the right people so that you don't sell it as whole life. And when they turn 80, they realize, like my client did, that they're going to lose it, right? But if you structure it the right way, it could also be a very good plan. And to wrap up today's call, guys, with the title of the call, right? Is term insurance bad? Absolutely not. No life insurance is bad. All right. They're all good. You just have to write them for the right people at the right time. It's not a one shoe fits all kind of thing, right? A lot of times you're going to have a client that needs multiple plans. Okay. I'm a good example of that. I have term insurance. I have universal life insurance, right? My kids, I have whole life insurance for my kids when they're little. So a lot of times if you take your client's complete picture, they need multiple options to fulfill their goal for insurance for their whole life. And if you as the agent sit down and you take the time to actually talk to them about each one and you come up with a lifetime plan for them, you walk away with 1, 2, 3 policies and your client never has to worry about insurance again, ever. All right. So the last thing, guys, one thing I want to mention, if you're looking at writing term insurance, I'm a big fan of Transamerica's term insurance plan. That's the one I have on myself. Very good plan. Gives people the option to convert it to whole life or a permanent type of plan later on down the road without having to get requalified medically. And check it out. Depending on your age, you can get up to $2 million of term insurance and not have to do a paramed exam, right? That's huge. I got a $2 million policy through them, and it was simplified issue underwriting. I just did the medical questions, and that was it. I think if you're between ages 50 and 60, don't quote me on this. I'll have to pull it up. But I want to say you can get up to $1 million in coverage without having to do a medical exam too. So if you're looking at writing term insurance, that's a really good one to go to. Very good plan. You get a high death benefit and not have to worry about, getting a nurse exam and all that stuff. So guys, what I want you to take away from today's call, all the products are good, right? But it depends on your client. It depends on their health. And it depends on what their goal is for the insurance to figure out which one's right for them. All right. They're all great plans. Just depends how you structure it as their agent. And the way that you do that is you just ask them, right? What's your goal for the insurance? What do you want to accomplish? And also ask questions that clients might not be aware of the possibilities of it, right? A client might not be aware that if they have let's say they just refinanced their house, like a lot of people did in 2020, 2021, a lot of people took out HELOC loans. They refinanced their house to pull equity out of it. They might have a 10, 15-year payback on that refinance, maybe even a 20 or 30 year. They might not know it's an option for them to have a cheap term insurance plan that could cover that if something happens to them. Make sure you guys bring that up. You'd be surprised at how many more opportunities it will create for you and how much of a better situation it'll put your clients in that you're serving. So hopefully you guys took away something from this call. I apologize about the glitchiness of the live feed. I seen it on my end. I don't know if you guys seen it on your end, but it kept freezing on me. So hopefully that didn't bug you guys too much, but it is Wednesday. Let's go crush the second half of this week and come back here on Friday to see who the agent of the month was last month.